Welcome to the Radio Revenue Podcast. Today, we're doing what we do best, taking a deep dive. And this time, it's into the Clorox company's most recent annual report, their Form 10-K. This covers their fiscal year that just wrapped up on June 30, 2025. Our mission, like always, is to cut through all that dense corporate jargon. We want to pull out the really important insights, maybe some surprising facts, and get a real sense of their strategic direction from this pretty hefty document. The goal is simple. For you, our listener, to get a crystal clear, comprehensive understanding of Clorox's performance, their strategy, the challenges they're facing, all without feeling like you just read a textbook.
Exactly. And these 10Ks, they're so revealing, aren't they?
Yeah.
It's not just paperwork. It's basically a mandated annual look in the mirror for the company. It lays out the past year, current plans, risks, their view of the future. For a huge consumer products player like Clorox, well, understanding this report is absolutely key if you want to grasp their market position and where they're headed. It's where the big picture meets the nitty-gritty numbers.
All right, let's unpack this, starting right at the top. The big picture, as they call it. Now, at first glance, Clorox net sales for fiscal 2025, they looked, well, almost dead flat. We're talking $7,104 million, barely a change from $7,093 million in 2024. Now, just seeing that, you might think, stagnation. But we know a flat line can hide a lot happening underneath, right? What's the real story there?
You're absolutely right. That flat surface, it really does conceal some deeper currents. Well, net sales were basically flat on paper. The actual volume, the amount of stuff they sold, that increased by 1%.
Okay, so volume up, sales flat. What gives?
Well, it was a mix of things pushing and pulling. First, they had some extra shipments because of an ERP system transition, logistics stuff. Second, they were lapping, meaning comparing against the big impacts from the cyber attack recovery and a retail inventory buildup last year. Those things had inflated the previous year's numbers a bit. And third, and this is crucial, they strategically sold off some key businesses that intentionally shrunk their overall sales numbers. So it's less about stagnation, really, and more about a strategic adjustment, plus some one-off effects washing out.
That makes a lot more sense, shedding some weight strategically. Which brings us to the real head-scratcher on the bottom line. A massive, almost unbelievable, 190% increase in diluted net earnings per share, the EPS. It jumped to $6.52 from just $2.25 in fiscal 2024. So for our listeners trying to gauge Clorox's real health, what's the big asterisk next to that number? Is this suddenly explosive profit growth or more those one-time factors?
Yeah, that 190% jump definitely catches the eye. And it is positive, but you nailed it. It's not a simple story of core business profit exploding. The biggest single reason for the jump was actually the absence of some really big losses they had last year.
Ah, okay. What losses were those?
Specifically, the prior year included a hefty loss from selling their Argentina business and also a big pension settlement charge. Neither of those hit the books in fiscal 2025. Now, on top of that, this year they did benefit from that higher sales volume we mentioned, some pretty effective cost-saving programs, and importantly, about $70 million in insurance money recovered from the cyber attack.
Right, the insurance payout.
Exactly. But it wasn't all good news for the bottom line. Those gains were partly chewed up by a loss from another sale, the Better Health VMS business this year. Plus, they faced an unfavorable product mix, meaning they sold more lower-margin stuff and they spent more on trade promotions. So yes, they've cleaned up some past issues and operations improved, but the real question for us is, what's the sustainable profit level look like going forward?
That's a vital distinction. Okay, so cleaning up the balance sheet from last year's hits played a big role. But the true pulse of a company, you often find that in its cash flow, right? The actual cash coming in the door from operations. Did Clorox turn those operational improvements into real cash?
Absolutely. And the cash flow numbers, they tell a much clearer story of underlying health, I think. Net cash from operations saw a really solid increase. It went up to $981 million in fiscal 2025 compared to $695 million a year before.
That's a healthy jump.
It is. And free cash flow, that's the cash left after they spend on maintaining their assets, that also improved significantly. It reached $761 million, which is about 10.7% of their net sales. That's way up from 6.8% last year. So yeah, it points to strong operational efficiency and a good ability to generate cash, which gives them flexibility.
Okay, strong cash flow gives them room to maneuver. So flat sales, masking volume growth, soaring EPS, largely due to cleaning up past stuff. This brings us nicely to Clorox's longer-term view. They talk about this thing called the Ignite strategy. Can you unpack that for us? What is it, and how are they using it to kind of reshape the business?
Right, the Ignite strategy, it's essentially their blueprint for growing profitably over the long haul. It's built on four main ideas, four strategic choices, they call them. One, fuel growth in their core, strongest brands. 2, innovate the consumer experience. Think product development, marketing. 3, reimagine how they work internally, looking for efficiencies. And 4, keep evolving their product portfolio.
Evolving the portfolio meaning deciding what to keep and what to sell.
Exactly. Shedding businesses that don't fit the core strategy and maybe acquiring ones that do. And what's interesting is how they weave sustainability into all of this. It's not just a separate thing. It's integrated into how they approach all 4 pillars, aiming for a more responsible business overall.
And that strategy, that evolving the portfolio piece, clearly drove some big decisions, like selling off entire business units. You mentioned a couple already. Can you give us a bit more detail on these key divestitures? What was the thinking behind them?
Precisely. It's about focus and putting resources where they'll have the biggest impact. So in September 2024, they sold off their Better Health VMS business. That's vitamins, minerals, supplements. Included brands like Natural Vitality, NeoCell, Rainbow Light. You might know some of them.
Yeah, I recognize those.
Right. Now, selling it resulted in a $118 million loss on paper this fiscal year. But strategically, the idea was to simplify. It lets them focus management time, R&D, marketing dollars on their core cleaning, home care, and maybe Glad categories where they feel they can win consistently. Optimize that return on investment. And before that, as we mentioned back in March 2024, they'd already sold off their Argentina business. That was a big driver of last year's lower earnings. So both moves were about exiting areas that were maybe less strategic or less profitable for them globally.
Okay, strategic pruning. And speaking of big brands, there's a major change coming for a very familiar name. Glad Bags and Wraps. That's been a joint venture with Procter & Gamble for ages, hasn't it?
Yes, for a long time. But that venture agreement with P&G for the Glad business, it's officially ending by January 31st, 2026. And as part of that wind down, Clorox is buying out P&G's 20% stake.
So Clorox takes full ownership.
That's the plan. As of June 30th this year, that buyout obligation was valued at $476 million. And importantly, it's now classified as a current liability on their balance sheet, meaning they expect to pay it relatively soon. So it's a significant financial transaction in the short term, but longer term, it gives Clorox complete control over Glad, allowing them to fully integrate it into their broader strategy.
Right, bringing it fully into the fold. Okay, let's shift gears a bit to operational challenges. Clorox had that really public, really disruptive cyber attack back in August 2023. They're saying now they're fully recovered, and they point to the insurance money. But fully recovered feels like a strong statement after such a big hit. From your reading, have they really put it completely behind them, or are there maybe lingering risks there?
That's a really good question. And you have to read fully recovered in context, I think.
Yeah.
Operationally, the company states they are indeed back to normal after the attack, which initially caused huge problems, getting products made and shipped. The $70 million in insurance they got this fiscal year definitely helped cover the direct costs. And it does say something positive about their disaster recovery planning, their ability to get back online. However, fully recovered usually means the immediate crisis is over. The longer-term challenge for any company hit like this is rebuilding trust. Trust with consumers, trust with retailers, that their systems and data are secure. And it means continuous ongoing investment to stay ahead of the next threat. It's a constant battle. So the 10K shows a financial recovery, but that background vigilance, that's key and harder to quantify.
Makes sense. It's never really over. And beyond just bouncing back from that crisis, they're also pouring serious money into their digital future. This sounds like a major overhaul. What's the scope of this digital transformation, and what are they hoping to get out of it?
Oh, it's foundational. This is a big multi-year effort. We're talking 5 years and an expected cost of around $570 to $580 million.
Wow, that's significant investment.
It really is. And it's not just tweaking things. It's a full upgrade of their digital capabilities and productivity tools. A big piece is a new enterprise resource planning system, an ERP, and moving more operations onto cloud platforms. They successfully rolled out the new ERP in Canada during fiscal 2025. The much bigger U.S. rollout just started in fiscal 2026.
So the biggest part is just beginning.
Right. And the expected payoff is long-term efficiency gains across the board. Supply chain, e-commerce, how they innovate, how they build their brands. There's an interesting little detail related to this. In the last quarter of fiscal 2025, some retailers apparently ordered extra product ahead of the U.S. ERP switch, just to be safe on inventory. That gave sales a temporary little bump, but Clorox notes that's expected to reverse out in fiscal 2026 as things normalize. Just a short-term blip in a long-term plan.
Got it. A temporary ripple. Okay, so lots of investment in systems and infrastructure. But it's not just about servers and software, is it? A company is its people, and its impact matters too. What does the report tell us about how Clorox views its employees, its human capital, and its broader sustainability efforts?
You're absolutely right. They definitely emphasize the human element. They employ around 7,600 people globally, and the report frames the workforce as essential to growth. They talk about a values-based culture, a commitment to diversity and inclusion. They do things like annual pay equity studies for their non-production staff to ensure fairness. And one thing that stood out to me, they have over a dozen employee resource groups, ERGs.
Like affinity groups.
Exactly. But they actually use these ERGs as internal focus groups, too, getting feedback on product ideas and marketing concepts. It seems like a smart way to tap into diverse perspectives right within the company.
That is clever, using ERGs for insights. And you mentioned safety and well-being. Anything specific there that caught your eye? How does that stack up?
Yeah, they provided some specific numbers here that are quite impressive. Their commitment to safety really stands out. Their recordable incident rate, or RIR, for fiscal 2025 was 0.66.
How good is that?
Well, to put it in perspective, the average RIR for goods-producing manufacturers in 2023 was 2.8. So 0.66 is significantly lower. Very strong safety record.
Definitely.
And beyond physical safety, they talk about prioritizing mental health support, providing paid parental leave, adoption help, family-building benefits, even subsidized childcare. On the financial side, they mention competitive pay and a pretty generous 401k contribution, up to 10% of an employee's salary. You put all that together, and it likely helps them attract and retain talent, which is a real competitive advantage these days.
No question. On the broader sustainability front, Clorox seems to be getting some positive attention, some awards.
They are. They highlight being ranked #1 on Barron's list of the 100 most sustainable U.S. companies for the third year running.
Third year, wow.
Yeah. And they're also recognized by Time magazine as one of the world's best companies and by Newsweek as one of America's most trustworthy companies. This kind of external validation, it suggests their sustainability efforts are being noticed and are resonating. For a company selling directly to consumers, that positive perception around ESG, environmental, social, governance that can definitely build brand loyalty, attract talent, and maybe even ease regulatory scrutiny down the line, it adds tangible value.
Okay, so strong internal performance, strategic shifts, but no company operates in a vacuum. The consumer products world is famously competitive. What are the big external pressures, the market dynamics Clorox is wrestling with right now?
Oh, it's intense out there and constantly changing. Clorox obviously competes hard against other big national brands we all know, but the pressure from retailers' own private label brands is huge and growing.
Store brands, yeah.
Exactly. And sometimes those retailers have deeper pockets. They can spend more on promotions or maybe adopt new tech like AI faster to optimize pricing or supply chains. The report also flags the rise of pure e-commerce players, hard discounters like Aldi or Lidl, and subscription box services. All of these create more options for consumers and tend to put downward pressure on prices and squeeze brand loyalty. It's a real battle for shelf space, both physical and digital.
And you mentioned retailers. Clorox seems quite reliant on a few very large customers, Walmart in particular. That concentration, how much does that tie their hands strategically?
It's definitely a significant factor, and they're transparent about it. Walmart and its various divisions accounted for 27% of Clorox's total net sales in fiscal 2025.
Wow, over a quarter from one customer.
Yep. And their top 5 customers combined make up nearly half of all their sales. That kind of dependence means shifts in those retailers' strategies. Maybe they decide to give more space to their own brands or demand lower prices or change inventory levels. Those things can have a major impact on Clorox's results almost instantly. And add to that the whole changing landscape of how people shop more online, interest in natural products. Clorox has to constantly navigate those relationships with their big retail partners very carefully while also adapting to shifting consumer habits. It's a tricky balancing act.
Absolutely. Okay, so as we wrap up this deep dive, it's been a year of, let's say, recalibration, recovery from the cyber attack, strategic divestments, but plenty of headwinds remain. What are the key risks Clorox is keeping a close eye on as they look ahead? And what's their overall message about resilience?
They lay out quite a few ongoing concerns. Macroeconomic uncertainty is high on the list, things like inflation, potential recessions. Geopolitical instability is mentioned, conflicts in Ukraine, the Middle East, tensions around China and Taiwan. All that can disrupt supply chains or demand. Then there's evolving trade policies, tariffs, always a moving target. And cost volatility is still a big one. Raw materials, energy, shipping, labor costs. Even with their cost-saving efforts, those external prices can fluctuate wildly.
Right.
Plus, protecting their intellectual property globally and adapting to complex new regulations around things like data privacy or environmental rules like potential plastic taxes, those are ongoing operational challenges too.
So, solid results this past year, but driven by some specific factors, and the path ahead is definitely not clear sailing. What's the main takeaway then for you, the listener, looking at this complex picture? How does a giant like Clorox navigate all this?
Well, their stated plan is clear. Keep investing. Investing in their core brands, in their digital capabilities, and in their people. The goal they state is to build a stronger, more resilient company capable of delivering consistent, profitable growth over the long term. You look at the actions recovering from the cyber attack, selling off non-core businesses, making that huge digital transformation bet. It shows a company actively trying to adapt, to strengthen itself in what is undeniably a volatile and challenging world. The takeaway, I think, is that even the biggest, most established companies like Clorox are constantly in flux. They have to be. They're balancing today's operational realities with a strategic vision for the future, always aiming for long-term value.
It really paints a picture of a company in constant motion, doesn't it? Adapting, trying to stay ahead. So for you, the listener, maybe the key insight here is seeing how even giants like Clorox have to continually reshape themselves. They're juggling those operational challenges while trying to be strategic, focusing on that long-term value. What lessons can you maybe take from how Clorox is pruning its portfolio, tackling digital change, or navigating that intense competition? Think about how those dynamics might apply in your own world.
It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.